Good morning. I'm delighted to be able to present to the 121 Investment Conference and introduce you to Savannah Resources and our Mina de Barroso Lithium project in northern Portugal, which happens to be Europe's leading conventional lithium project. It's conventional in the sense that it's a conventional mineral, spodumene. It uses conventional open-cut mining. It uses conventional processing. It produces a conventional product, and that's the product that's the most internationally traded lithium mineral in the world. The project's located in northern Portugal, just below the Spanish border. It's about 140 kilometres, I should say, from the port of Porto, which happens to be the second largest port in Portugal. The northern part of Portugal is very well endowed in terms of green energy sources. It's a major region of generation of both hydro and wind power, and this will be an important element in our green credentials, as we'll be using green grid power to power the plant itself. The other important feature is that it enjoys excellent local infrastructure. For example, it's right on the grid. In fact, the power lines run right over the top of the project. It's also well connected into the national highway system, and a dual carriageway expressway is about 10 kilometres away from the project and runs directly to Porto. One of the other key features is that Portugal is a low-cost jurisdiction in which to operate, and that gives us a significant operating cost advantage over many of our international competitors, particularly the Australian spodumene producers. Being in Europe is a great place to have Europe's largest spodumene lithium deposit, mainly because of the increasing importance of the energy transition to Europe and the very sort of major move towards the production of electric vehicles. We sort of see the demand for electric vehicles going up massively in Europe. Europe hopes to be the second largest global market for electric vehicles. And this is going to drive enormous demand for lithium, and the consumers of lithium in Europe, the battery manufacturers, the electric vehicle manufacturers, are certainly now becoming sort of keenly aware of the sort of relatively sort of fragile links into the top end of the lithium value chain. This is a sort of really very much sort of a key slide which outlines the development and of the lithium-ion battery chain in Europe and the development of electric vehicles, and really sort of shows that there's going to be a very sort of large rollout of new models in terms of EV ranges from virtually all of the European EV manufacturers. That, of course, is sort of promoting the growth and the build of new battery plants. Here we have almost 20 sort of battery plants already established. There's probably going to be another 20 battery plants established. And what that's really going to do is drive very significant demand for LCE, lithium carbonate equivalent. That's the lingua franca in the industry. And going from, say, 16,000 tonnes of lithium carbonate equivalent per annum up to around about 219,000 tonnes per annum of LCE by 2030. That's a massive increase. And at the moment, there's no indigenous production of lithium in Europe at the moment. The material we're going to produce, the spodumene lithium, obviously is mined, it's produced, and what will be done is it'll be consumed in lithium hydroxide refineries. These are refineries or conversion plants that convert the spodumene concentrate into lithium hydroxide. We're seeing very sort of strong interest from a number of major European industrial groups in terms of the construction of hydroxide refineries. These are really very much the sort of key elements in driving lithium independence for Europe and the European EV industry. The EV industry in Europe, really is being driven by a number of factors. Clearly, emissions legislation is a very important one. With that comes the sort of concerns about security of supply. The EU is vitally concerned in the financial health of the European car industry. It's a very major employer and vital, really, to the economic sort of welfare of the European Union. So the European Commission is undertaking a number of initiatives in this area. It's created the European Battery Alliance, which is really there to sort of encourage the end-to-end development of the European lithium-ion battery chain. As well as that, as a result of the current pandemic, there's been announced a very sort of major economic restructuring program involving something of the order of 1.85 sort of trillion of investment, and a lot of that money is going to be directly invested into the development of this energy transition in Europe, of which Savannah and Mina can play a very important part. Portugal as well is feeling the effects of the economic downturn, particularly because of its tourism industry. And the government very sagely has created a commission to look at the means to encourage economic growth. The development of its very promising lithium industry is seen to be sort of a key element in that program, and of course Mina is the leading project in Portugal itself. Just focusing back on the project, it's in northern Portugal. We believe that this northern part of Portugal is probably the most prospective region of Europe for spodumene lithium, which, as I said earlier, is the major sort of conventional lithium mineral. We believe that there's plenty more exploration potential. We've already established the largest resource in Europe, and we've been there since about 2017. Our tenement is around about 5 square kilometres in area. It's a granted mining lease, 30-year term running through to 2036, with the option to extend for a further 20 years. This outlines the shape of the deposit and also the very extensive drilling that we've undertaken on the deposit since 2017, when we secured the project. We've drilled over 30,000 metres of drilling, over 300 drill holes. Each one of those little green dots represents a drilling cluster. And we've proved a resource of around about 27 million tonnes. We stopped drilling because we felt that we had enough material to support a sort of long-term mine development, but our work has shown that there's an ultimate exploration target of around about 50 million tonnes within our tenement package. So that's a very major resource, and we'll be able to sort of provide a long-term and reliable source of lithium for the growing lithium refining industry in Europe. We're undertaking small-scale mining, as you can see, on the tenements at the moment, and we're mining quartz and feldspar, which is a potential co-product. This outlines the project itself in terms of the layout. We're looking at sort of very conventional open cut mining over a series of sequential open cut mine developments. The plant itself is a very conventional plant that uses very tried and proven and reliable processing techniques around flotation. We're developing a project which has a de-risked environmental footprint. We're looking at only using organic reagents in the processing sequence itself. We're looking at dry stacking the tailings, and we're looking at constructing a bypass road so that any mine traffic and exiting product entirely avoids local villages. I think one of the key things about a project like our own is that because of the number of factors, it has really very sort of superior economics. The economics are very much driven by a low strip ratio. It's inherently a low-cost setting in Portugal, and certainly a factor less than the cost setting of, say, WA in Western Australia, which is currently the major producer of spodumene concentrate globally. And of course, we have the benefit of a co-product stream as well, the quartz and feldspar, which helps to sort of drive our average operating costs per tonne down quite considerably. What it shows is that at reasonably expected spodumene concentrate price levels, the project will show a very quick payback, very strong cash generation, and superior economic returns, which makes the financing of the mine development all that much easier. We're talking about a capital cost of the mine development of around about 110 million euros, which is very sort of consistent with a mine of this size, around about 1.5 million tonnes per annum, which will probably sort of produce around about 200,000 tonnes of spodumene concentrate per annum, which could sort of provide anywhere between 20 and 30% of Europe's requirement for lithium. I think the other important thing is that our project compares very favourably with other international sort of spodumene projects. Here are a number of tables that sort of illustrate that point, but I think the important thing is to sort of realise that we're concentrating on a conventional project. We've sort of eliminated from this analysis here high risk, unproven lithium projects, mining exotic lithium minerals, utilising unproven process technologies, and in our estimation, sort of pretty high risk. Spodumene development's a whole lot more sort of widely employed, and our project enjoys relatively low operating costs in comparison to our industry peers. A low capital intensity, it means it's a very doable project, and very attractive reserve to market capitalisation ratios. The pathway from here, lots to do over the next few years. We're hoping to finish our DFS in 2021. We're targeting the mine being commissioned in 2022 and full-scale production in 2023, which will coincide with a likely increasing demand for lithium as the EV industry develops in Europe. Two sort of very key factors will be offtake. There's been remarkable interest from multiple groups around taking or securing offtake from Mina and Barroso. We're in negotiations with those groups at the moment, and some of those negotiations also involve investment as well. One of the key work streams will be completing our environmental and project sort of licensing. We lodged our EIA in May of this year, and we're hopeful that we'll get sort of clearance for the mine development in the early part of next year. Our technical evaluations are underway at the moment, and we hope to finish our DFS next year. A lot of the work that went into the EIA is now being folded into the DFS. We're working very closely with EIT InnoEnergy, which is a corporation strongly aligned with the European Commission. They're helping us on the financing and partnering aspects, and we're getting great support from them and from the European Commission. As well, it's important to maintain excellent relationships in the local region, and we're working very hard around the development of a benefit sharing plan, a very attractive and sort of leading edge benefit sharing program for the local community and the local region, a good neighbourhood plan, and of course getting out there and sort of talking about some of the enormous economic benefits and social and demographic benefits that will flow to the region and to Portugal itself. So in summary, we've got the largest spodumene lithium project in Europe. It's conventional, it's low risk, and it's going to play a meaningful role in the reduction of CO2 emissions in the European transport industry. It's probably the most shovel-ready of the lithium projects in Europe. There's plenty of room for everyone, but we want to be the first cab off the rank. And of course, lithium hydroxide is the sort of preferred material to go into some of the more advanced battery chemistries that are being employed at the moment. We're looking to piggyback off the expertise that's been developed in Australia with spodumene developments. We don't want to be first in the line in terms of innovation. We're very much happy to sort of copy what's been successfully employed elsewhere. We think there are excellent fundamentals for electric vehicles. I think that the industry is concerned really about reliable supply of these sort of key lithium minerals. We think that we can play a role in providing reliable supply within Europe, and particularly because of the volumes of material we'll be producing, it'll be sort of a key cornerstone feedstock resource for the European industry. So in summary, we think we've got a great project. It's very much the project in the right place, in the right time, got all the right economic characteristics, and we believe that our shareholders will be well rewarded over coming years through development, production, and as we sort of provide a long-term and reliable, green and safe resource of lithium production for the European electric vehicle industry. Thank you.